Hey everyone, welcome back to Corporate Decoder. Today we're diving into Eva Live Inc's latest financial report. And let me tell you, the numbers are so exciting, they might just keep you awake all night, or maybe not. Before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below if you want to chat more about this stuff with fellow finance fanatics. In short, the company reported a significant increase in operating income, jumping from around $196,000 last year to over $2 million this year. But is it really good? Let's find out. First off, this is a Form 10Q, basically a quarterly checkup that publicly traded companies have to file with the Securities and Exchange Commission. Think of it as a school report card showing how well they did in the last 3 months. This report covers the first 3 months of 2025, ending in March. It gives us a snapshot of Eva Live's financial health early in the year. Eva Live Inc. is registered with the SEC under file number 33322733162. If you want to look up their filings yourself, that's the number to use. They are based in Los Angeles, California, and their trading symbol is GO on the OTC markets. The report confirms that Eva Live has filed all the necessary reports over the past year and has been doing so for at least 90 days, which means they are keeping up with regulatory requirements. Scroll. Smaller reporting company identifies as a smaller reporting company and an emerging growth company, which means they get some breaks on certain regulations and reporting requirements. Keep that in mind. It also means that they are probably not that big. The company had over 31 million shares of common stock outstanding as of May 15, 2025. This number is important for calculating things like earnings per share, which we will talk about later. Now let's move on to the financial statements. First, the balance sheets. They are like a financial snapshot. Looking at the balance sheet, cash increased significantly from about $76,000 at the end of last year to around $316,000 in March. And accounts receivable, that is the money owed to them, also increased from $4 million to almost $6 million. Notes payable or short-term debt also increased by $130,000, importantly the accumulated deficit, which is how much more money the company spent than it earned over its lifetime, decreased a bit from over $26.5 million. Overall, the total stockholders' equity, that is what the owners would theoretically get if the company sold all its assets and paid off all its debts, more than doubled from $1.5 million to $355 million. In simple terms, the company seems to have improved its financial position during the first 3 months of the year. Next up are the income statements. They show how much money the company made and how much it spent. The total revenue increased significantly from roughly $2.20 million to almost $3.7 million. Looking at the operating expenses, general and administrative costs were about the same year over year, sitting at around $370,000, while media traffic purchases decreased from about $1.6 million to $1.3 million. This all resulted in a large increase in operating income, going from a profit of approximately $196,000 to a whopping $2 million number. The company reported earnings per share, that is, profit per each share, of $0.06 compared to $0.01 last year. Now, the consolidated statements of cash flows, which shows where the company's money came from and where it went. The company had roughly $109,000 in cash used in operating activities, that is, using cash for its normal day-to-day running of the company, compared to generating over 1 million customers are taking longer to pay their bills. The company also spent around $3,000 on fixed assets. Meanwhile, the company brought in nearly $130 from financing activities and from loans. The end result was that cash and cash equivalents increased by over $240,000, going from $76,000 to almost $317,000. Scroll note Q1, business, Dick scratched and nature of Ocean Scroll, switching gears. Let's look at some of the important details in the notes to the financial statements. Most of their customers are from North America. As of March, the top 3 customers accounted for 88% of receivables, which is worrying since if any one of them went belly up, there would be significant issues. The company acquired 100% of AdFlare Limited in July 2022 in exchange for shares of the company's stock. Due to some accounting rules with reverse mergers, the company eliminated goodwill of $2 million. which might sound good, but it's not really related to business performance. The report notes that there is substantial doubt about the company's ability to continue as a going concern. This is due to recurring losses and negative cash flows, something the auditors mentioned in their report. The company also mentioned that it had secured financing through a convertible note for $200,000, which is a type of loan that can be converted into stock. In a separate agreement, they also entered into a loan for $233,910 weighed for $20,33,910 with interest of 12% per year. Finally, they state that they have no off-balance sheet arrangements. Basically, they are just saying they have no hidden deals that could negatively impact their financial situation. Now, looking at these results more broadly, it seems like Eva Live had a great first 3 months of 2025. Revenue increased significantly and the company finally became profitable, for now at least. However, concerns over reliance of only a few clients may cause big problems. It also has to keep an eye on cash flow and watch out for big debts. It remains to be seen if this performance can be kept going. Alright, that's our breakdown of Eva Live's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.